With us now for more is Angie Pacis, CEO of AIA Investment Management Philippines. So good to see you again, Angie. Welcome back.
Thank you. Happy to be here, Mimi. Happy to be here, Kathy.
That'd be right. The Bangko Sentral delivered another rate cut and is hoping to deliver another more, depending, of course, on data. What impact is that having on your fund in terms of the equities, cash, and maybe fixed income?
Okay, so the bond funds have actually been rallying. We kind of saw the decline in interest rates as the signaling of the BSP has been consistent. And if you actually look at the performance of bonds since the spike in June, it has actually dropped significantly. So year to date, right, our long-term bond fund is registering a return of close to 4%. That is as of August 20 August, as of yesterday. Yeah.
Right. So are you extending durations, moving into higher yield credits, or maybe even shifting towards risk assets in the local market?
Okay, so our view is we like duration, right? And we're already there. What we're seeing actually, let's say risk asset, if you mean by risk asset, is actually equities. We're seeing still some volatility in the equities market, largely driven by the uncertainty globally. So what we've actually been advising our clients is really, when there are dips, we just pick up. What we're actually trying to minimize on is really on the money market funds, mainly because, if inflation expectation is actually well under control, and even if the BSP is saying we're already in the sweet spot, but if he's actually, our governor has signaled that, at the opportune time, we're going to cut reserve requirement ratio, then you actually want to favor bonds over money market.
Okay, well, what about cash, though? Are you fully invested at this point, or are you keeping some powder dry?
Okay, we always have a little powder dry, mainly because we're waiting for good opportunities in the equities market. But we're lighter than what we would normally be on cash. We're lighter than what we would normally be on equities, and we're actually heavier on the bond markets.
Okay, so what would you need to see to actually get heavier in stocks? What sort of conditions in the markets?
Okay, so we're just, if you look at the actual fundamentals of the Philippines, it's actually looking very favorable. The governor called it a sweet spot because the economy is in full employment, and we were expecting the consumer to recover. But the stock market being very illiquid is highly susceptible to global sentiment and flows. So it's really, when it's sentiment driven, it's going to be, you just actually take stock of value and pick up when there's value. So what are we waiting for exactly? The second round effects of tariffs on U.S. inflation and U.S. growth, it's still dividing the market. So what either we see the assurance, although we're seeing it now, but some assurance that the U.S. economy will continue its current trajectory, or we wait, let's say, for the impact of tariffs, because you haven't seen it yet, right? The full impact of tariffs on U.S. inflation, because that will actually have an impact on U.S. monetary policy, and to a certain extent, our own monetary policy will have to adjust, or even your secondary market rates will have to adjust to the relative difference in interest rates between the U.S. and the Philippines.
Got that. Well, thank you for keeping us up to speed on the risks and opportunities post the Bangko Sentral decision. Angie Pacis, the CEO of AIA Investment Management Philippines.